in some ways, there's a sort of two-pronged story here. You have, on one hand, a slowdown through lockdowns and some bumpiness in terms of the trajectory on demand and the sort of post-COVID sort of renormalization. But on the other hand, what you're seeing is a lot of volatility and uncertainty continue to exacerbate the supply outlook, meaning that most companies that ought to be investing in future production, particularly the majors, are not. So essentially, we're kicking the can down the road in terms of a tightening of the fundamentals. In the meantime, potentially just enjoying, probably not the best word, but ultimately taking advantage of some of the slowdown that we've seen vis-a-vis China and some of the impacts of inflation.
Christyan, when we spoke with you last time, we spoke about your report talking about the inability for a lot of oil producers to actually produce enough oil, and that people really had not counted in that potential shortfall. We're just getting some headlines from OPEC with Saudi Arabia telling the nations that produce oil that they increased production by more than 11 million barrels per day, basically showing their ability, their capacity to increase output. Does that give you any confidence? Have you seen anything to change your view on that front?
Absolutely not. In fact, it's probably consolidated our view, because what you have is effectively Saudi and some other members of the GCC essentially subsidizing through adding barrels into the market, the oil price, but ultimately that is a limited amount of reserve, right? So we're literally, they're keeping their powder dry through the spare capacity. We do believe Saudi can go north of 12.2 million barrels, but the reality is that we can't just rely on OPEC and Saudi to provide the marginal barrel, because what you then have is US shales slowing down, rig counts are falling because of logistics, supply chain issues. It's amazing, pre and post COVID, it's like you've dismantled it. A few things have gone rusty, you put it back together again, and it's just not as effective in terms of supply growth from shale. And then you're left with everybody else, so non-GCC, non-US, which is the majors, the IOCs, and they're doing everything but investing in oil. And that's particularly because of all the uncertainty, not just about the front-end volatility of the price, but social tax, windfall tax, giving cash back. So oil capex has never been as far back in the queue. So that leaves more reliance on Saudi to ultimately fill the gap. But the message, I think, around the future is that it can't be just OPEC that underwrite or fill in the deficits when needed. And this is part of our super cycle thesis that in the end, we're going to see a structural deficit that can't be managed or met quickly enough through short cycle barrels.
So does anything make you question your super cycle thesis at a time when you've got Morgan Stanley and you have UBS moving away from some of their previous forecasts and actually cutting their near-term outlook for crude prices? Are you doing the same, or are you doubling down and saying they're missing the boat?
Yeah, I think we're probably in the latter camp of doubling, tripling, quadrupling. I mean, we've been bullish for 2 years now, and all we've seen is this sort of gyration, particularly led by uncertainties around demand. I think there is a degree of sort of confusion as to where demand will ultimately emerge or trend to over the medium term. We still believe that demand will ultimately continue to grow to 107, 108 million barrels by 2030. And the issue is this: if that's right, and we have a shortage of all fuels, and we're back to the same issue, which is how do we meet this energy deficit in the future? It can't be coal, it can't be gas, we're maxed out LNG, it's got to be through solar and wind. And then when you've gone through that, we still have a major deficit in oil, which basically means that we're going to see repricing of oil significantly higher. And so we still stand by our upside case at 150.
Christyan, a question that speaks of the moment. I've got like 8 ways to go here, but I think we have to speak of the continent of Europe in the hope or prayer of finding energy in the next 12 months, the next 6 months, maybe even the next 6 years. Maybe it's away from your remit, but do you have an optimism Europe can succeed in staying warm this winter?
I think ultimately we're okay for this winter, and that's because we've had Nord Stream on. We have gas storage up at 90%. Regas capacity is roughly 85%. So we've got the flex, Tom. The issue is not this winter; it's into next winter. And then we start to debate: well, how do we actually structurally fix this long-term supply issue of energy? We can't just provide quick fixes and kick the can down the road. So, if anything, I'm more concerned about as we go into the second half of 2023, how we manage, particularly as China comes back. I think in some ways, China has appeased this deficit, this crisis in Europe by virtue of having lockdowns. If you have lockdowns ease, China reemerges as a marginal buyer of LNG, then we will have deficits in Europe in energy that can't wholly be met through gas unless we have gas to oil switching, which is clearly bullish demand for oil, particularly through next year, which is why we struggle to take numbers down on demand when all we can see is more demand for oil, particularly as it's still the cheapest fuel relative to all other